What is up, guys? Metallicus Digital Assets, Innovation, and U.S. Competitiveness X Spaces. Now, you're really going to want to watch this if you're a member or of the ZEBEC Army. Everything that Metallicus does basically helps credit unions get their own stablecoin, okay? Which they're going to translate through their metal dollar stablecoin that they have that basically goes to FedNow because Metallicus is a FedNow showcase service member. So everything that Metallicus does, we want to pay attention to as a member of the ZBAC Army. Okay. And what is very profound to me is that this is the second congressman that they've had a spaces with. First, Byron Donalds of Florida, who's now running for governor. Now, Buddy Carter of, I believe it's Georgia. So it's very clear that Marshall Hayner and Metallicus are tapped into what's going on politics-wise, and they seem to have a say, or at least the ear of the Republicans and how to influence policy there. So very, very huge if you're looking for a platform, a blockchain that has Republican backing, that has political backing. Well, Metallicus is it. So let's take a listen to this here. Let me go ahead and share my screen here. And we'll listen regular speed. So I know last time I was going a little fast with the speed and I can listen to it at that speed, and that was tough for some people. But understand, if we're going to listen regular speed, that means the video is going to be longer. Okay. So you can't have both. And literally, I had someone who had a comment for both. They said, "Oh, it was too fast for me, but your video needs to be shorter." Well, it's like, okay, well, we're going to have to pick a side. I know you can't please everyone. So we'll make sure that at least you guys can hear it at regular speed, and we'll go through and react because I think this is very important as far as policy goes. It's very important to listen to here. So let's go ahead and listen right now.
Of this Twitter Spaces, but really diving deep into what could happen, maybe perhaps what should happen as the U.S. considers new regulatory frameworks from stable coins to market structure to consumer protections, right? That impacts every single one of us listening in right now. We are really planning to highlight how the U.S. can strike a balance between responsible innovation, global leadership, and of course, protecting us everyday consumers in an increasingly digital global economy. So once again, thank you guys so much for joining in this conversation.
Again, in this conversation, this kind of had from the high level, right? This is from like a U.S. competitiveness level, but one of the things that continues to be stressed is stablecoins, 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 which we know ZEBEC is a leader in that space as far as payroll, and when it comes to translating payroll to stablecoins, ZEBEC is a global leader in that space. Metallicus can definitely be a U.S. leader in that space when it comes to the whole sector of credit unions and onboarding them to ISO 20022. Well, Metallicus will be a U.S. leader in that space. When you connect that, Simon Babakani, CEO of ZEBEC, said, "Hey, banks that adopt stablecoins just make it easier for us because now we can connect to them." Well, that's what Metallicus is doing with credit unions. So this is a very important conversation to listen to here.
And actually, Congressman Carter, I'd love to start with you because when we zoom out and look globally, how would you assess where the US truly stands today on digital assets and stablecoin infrastructure when you think about comparing to other countries or continents like Europe, like Asia, and emerging markets?
Well, first of all, two things. First of all, thank you for having me. I appreciate the opportunity to engage with you. And secondly, this is something that's very important for us in the United States. I feel like we're in a good spot but we need to remain in a good spot, and we need to be the leader in this. We can ill afford to let other countries take the lead in this, because if we do, we're going to get behind, and we don't want that to happen. We want to, I think that everyone in Congress, the general sense that I feel, and that I sense, I should say, is that, we understand we need to come up with some kind of regulatory clarity. We need we need to make sure that that our rules, our regulations, our laws, that they give people confidence that we here in the United States, we're going to be the leader in this area, and we're going to be the ones who set the standards and set the stage for what happens in this particular sector. And I think.
Okay, so Buddy is saying that we in the U.S. need to be the leaders of, cryptocurrency, digital assets. We need to be the leaders here of it. Uh, you know, Again, in the lens of our conversation with ZEBEC, one of the things that we've really kind of stressed is ZEBEC is global. We know the all unity stablecoin and things like this. Partnerships with Facet, in the Southeast Asia area. It's a global company. Partnerships with Circle, which Circle also has its own version of the euro, okay, which they can use with all Unity stablecoin that ZEBEC is, the global payroll partner for Deutsche Bank with, okay? So in a sense, we know that this is global, is my basic comment there. But Buddy Carter, Congressman Buddy Carter, is saying that, hey, we of the U.S., we want to be the leaders of it. And ultimately, I believe we will be the leaders of it because everything globally seems to want to connect to our stock market, which is the biggest pool of liquidity in the realm, in the world here. So, again, ultimately, I think it behooves us, shout out to Crypto Future, it behooves us to be leaders in this digital asset space because we got the big pot of liquidity here. And everyone's going to want to have, want to be a part and put money into our big liquidity pool, right? So let's continue.
I think that's very important. There are many of us in Congress who need more education in this area, but at the same time, we recognize the importance of it and recognize the importance of not just passing legislation and regulations to be passing regulations and legislation, but instead to, as I say, creating regulatory clarity so that we know what we're doing here, and that people will have confidence that the U.S. is the leader in this area.
Now, that's something really important. He touched on regulatory clarity. I know a lot of people are not happy right now because the market is down. Everything has cycles. This is our down cycle in this particular point of the market. But once we get clarity, once we get regulational clarity, things like what Metallicus is doing with onboarding these credit unions, things like what ZEBEC is doing with having, streaming payroll, that will be able to fully go online, right? Like there's a Clarity Act that has not been passed as far as I know. I know that Metallicus has mentioned it, but there's a Clarity Act that needs to be passed for credit unions too, for everything to keep going, right? For them, right? So once all of this clarity happens, in a sense, we know that we're getting closer to it because acting chairperson Caroline Pham of the CFTC, when she was acting chairperson, she gave clarity. So again, we're closer and closer. We're inching closer and closer. And if you guys were not aware here, I'll bring it up here and show you guys. One of the first stages of the crypto market infrastructure bill has been passed. So Senate panel passes crypto CFTC regulation bill. So that's very important because this is the first time that it's passed a stage that it needed to pass in the Senate. Okay, so it passed this committee. There's a couple more stages of passing that it needs to do. Right, this seems kind of highly inefficient the way that they do things as far as passing these bills. But you know what can I say about that? But this is the process. So this is very important because it's the first time. I think they mentioned it here. It's the first time. Okay, yep. This development marks the first time crypto market structure legislation advanced beyond the Senate committee. The next step is for the Senate Banking Committee to hold the hearing on this version of the crypto market infrastructure bill. Okay. So very, so the ball keeps moving. Shout out to CGA. It keeps matriculating down the field here. So we're getting closer and closer. But once this completely happens, I think the floodgates are loosed. Okay. So let's get back here to our continue here. Let's continue.
Yeah, I completely agree that the US is going to be a leader in this area. And I want to bring Marshall into this, especially kind of piggybacking something off of something that you just said around regulatory clarity. Marshall, when you think about entrepreneurs and entrepreneurship in general, especially that broader ecosystem, many times entrepreneurs hear that regulation slows innovations, but others argue that it provides a regulatory clarity that actually unlocks it, which is something that the congressman was just kind of alluding to around regulatory clarity. Where is the US, in your opinion, striking the right balance today, and where do you think it might be falling a little short?
Thank you, Corey. And I want to say thank you, Congressman Carter and Corey, and everyone here today for having me. And really excited to have this discussion today. In regards to what you just said, I believe that the U.S. has really positioned itself this year to be the global leader in cryptocurrency and blockchain. We have Silicon Valley. We have a lot of companies here. Cryptocurrency is a global phenomenon, but you find a lot of the innovation happening in Silicon Valley and around the United States. And I believe that through this process of clearly defining the rules and regulations and different.
Okay, just got to hold there. Marshall is 100% right when he's saying, okay, crypto's global, but a lot of it has been innovated in America, specifically in Silicon Valley. I know I talk ad nauseum about Tim Draper, American billionaire, which many people might not even heard of him before my channel. But I'm not, trying to boast or pat myself on the back, but I am saying that he's a very important billionaire when it comes to cryptocurrency. Well, do the research. You can check out my channel and past videos. His family, his father and his grandfather pretty much created Silicon Valley. And if you look at his family and the things that he owns and has investments in cryptocurrency, it would blow your mind. But a lot of it, of course, originated in the area that his family pretty much birthed, which is the Silicon Valley area. Okay, so a lot of these cryptocurrencies came out of that. Marshall was 100% right when he says that a lot of the world's biggest and best cryptocurrencies actually originate in America. Bitcoin, Solana, even though they say, Solana, a lot of it's kind of started in the Ukraine, I think, or Russia, but they are an American company. So Solana, Ethereum, Bitcoin, others, right? Including Swift blockchain, Metallicus, ZEBEC, right? So again, a lot of the innovation in the crypto space is in Silicon Valley, is in America.
Different types of digital assets and assigned primary regulators, it gives the crypto space the ability to grow. People in the past will say, and in general can say, regulation can stifle innovation. What they're not getting is that regulation done wrong stifles innovation. Regulation done right will give the clarity for companies to move forward. And that really has been the problem for innovators like myself and for people that have been in this space for a long time as we've built our startups in the blockchain world. There was a lot of uncertainty.
So there's a good point there again from Marshall. Innovation or regulation done wrong stifles innovation, right? So regulation done wrong can stifle things in that it can slow things down. We saw that with the Gary Gensler era. Now here with the Trump era, we've definitely seen innovation done right, or excuse me, regulation done right, in which the Clarity Act, or I'm sorry, the Genius Act has opened up the doors for things like Metallicus to do actual crypto lending platforms. Okay, we got multiple different ones. Metallicus is one of the leaders there. Of course, we got Aave. We got different things like can't remember, but you got different platforms offering Bitcoin loans here as well. So you know what I mean. So that's the Trump administration is actually moving the ball downfield as far as making crypto innovation and crypto regulation support crypto innovation. Okay. We see that with the crypto ETFs. We see that with the ending officially of the Ripple case, another American born cryptocurrency company, Ripple. It makes me also think of Hedera and Algorand. A lot of these cryptocurrency companies are American born. So again, Marshall is spot on there. Also, one of the things which we've seen it also too here with what the Trump administration has done, it has brought a lot of institutional money into cryptocurrency because the regulations are finally in place. Okay. With ETFs, ETFs for XRP, Bitcoin, Ethereum, Hedera, you name it. We also have digital asset treasuries or DATs. So a lot of these cryptocurrencies are getting soaked up just as one would these precious metals, which we've seen precious metals run as well. So again, this is a lot of information, but everything of it is very, very important. So thank you for that, Marshall. Let's continue.
You had to take a lot of risk, and you had to have very good lawyers, and you had to have a good understanding of a balance of the technology and the public policy as you deploy these novel innovations and solutions. And you have to innovate as the FDIC has said, innovate responsibly. The FDIC, is the bank regulator around insurance for the banks and protections. So in the same way, crypto really has to innovate responsibly. We have to build new systems that can empower people, but we have to do it the right way. And doing it the right way it's critical to know the rules of the road. If you don't know the rules of the road, if there are no rules that are written, then it really scares away large tech companies, it scares away banks, it scares away everyone that could be a part of this innovation because it's not clearly defined. And this year, with the coming market structure bill, the Genius Act, the Clarity Act, we're finally getting that clarity, pun intended, that we need. And I think it's very good. There's some things that we're caught up on, right? Like rewards over stable coins and different things that a bank lobby may say, well, hey, wait a second, and we should discuss those things. But I think in general, we've got the right recipe going into this. So
there's so much that he keeps saying, man. That's just sorry to stop it every time, but it's all juicy information. So he's right that without the regulation, without the rails, that kept a lot of institutional money out of crypto, right? In which now that we have it, it's finally coming into crypto, right? So that's a very good thing. And now there's an argument or a debate, if you will, about how we should do rewards on stablecoins. Now, notice he said rewards on stablecoins because rewards can technically be classified differently than yield. Okay, that's something that Simon Babakani told us about when he said, "Hey, there's ways around getting yield on stable coins, and one of those ways is rewards. So Marshall cut straight to the chase there when he said rewards on stable coins.
I think you're on mute, Corey.
Oh, sorry. I was over here talking, Marshall, and I was still on mute. Sorry about that, everyone. I was saying thank you for sharing that. I actually want to come back to what you were saying about stable coins in a second, but picking up on something that you said midway through about making how things are interconnected. And when I think about it, especially from a media perspective and how media has such power to influence perception, and then that perception ultimately influences policy. And as we know, policy influences the decision making and the flow of capital that impacts all of the things that we are talking about today. Specifically, Marshall, when you brought up stable coins, this is something that I feel is often framed as a crypto product, but increasingly they're being positioned as financial infrastructure. What does that distinction change, and how can policymakers or perhaps the public, how can or how should we be thinking about them?
Yeah, I think it's a great question. And one of the questions that's come up in the market structure bill is, should we treat DeFi platforms as money service businesses, as money as licensed financial agents? And there's been a lot of pushback on that, because a lot of people say, well, hey, these innovators are technologists, but they don't come from the TradFi world. And if we block them access to just simply build smart contracts and things like that, then we're kind of we're moving back. We're losing on the world stage. We're losing against China. We're losing against the rest of the world in terms of this innovation, and we think it should happen here. So I think one of the big things that people have gotten caught up on is that discussion, and I think a big part of that is the digital identity aspect, and banks and credit unions.
Well, so he's saying a lot here too. So in terms of DeFi and DeFi platforms, he's saying, okay, are we going to make them so that they need to have a certain license to transmit money or be money transmitters, right? And in a certain sense, we've already kind of gotten some laws on that, I believe, in this I think it's the Federal Reserve. They did this like this skinny master account, as far as like banks that can transact money. Like there's like you'd have to have this master account, and they issued this like skinny master account, which now you've seen a lot of cryptocurrency companies become national banks because of the skinny master account. I think it's BitGo, Ripple, Circle, maybe even crypto.com. I know for sure Ripple, BitGo, yeah, I think crypto.com. So a few different one of those, a few different ones of those agencies have become national banks. Okay, so even World Liberty Financial, Trump's cryptocurrency agency, they've applied to get the national bank charter. Okay, so I think there's like eight of them that have been issued so far. So to some of these the biggest companies, including Ripple, right? And Ripple's got it, right? Even though they say it's conditional, right? So very, very interesting there. So now Marshall's saying, okay, do we make it so that these guys need money transmitter licenses? Now he's saying, okay, well, a lot of it's going to depend on this digital ID, in which I definitely support digital ID as far as like, people getting the ease and the use of money with digital ID. I don't support digital ID as far as like, if you're saying I need to have digital ID to confirm that I'm human and not AI, or I need to have digital ID to confirm that I'm an American citizen and not an immigrant. That part I don't agree with. Like, I think the onus should be on AI to confirm that it's human, okay? And the onus should be on immigrants to confirm that they're American. Don't make it harder for me, an American, and you know, a human to confirm myself. Don't make that harder. No, I vehemently disagree with that. But as far as like digital ID for ease of use of money, making it easier to know who a person is, to transact money, and to do it in a safe and non-fraudulent way, I'm all about that part for digital ID. So let's continue here.
And financial institutions integrating this technology in a responsible way that innovators can they can work with those technologies but be exempt from some of those more onerous situations when it comes to operating like a bank. A small startup is not going to operate like a bank, but we can use digital identity. We can integrate banks and credit unions and financial institutions to be the on-ramp and the off-ramp through stable coins. Stable coins, I believe, will be treated and are going to be treated like a regulated finance. We can integrate banks and credit unions and financial institutions to be the on-ramp and the off-ramp through
banks, credit unions, and financial institutions to be the on and off ramp for stablecoins. What does that sound like? ZEBEC, right? ZEBEC being a financial institution in that whole example that Marshall gave. Again, these Metallicus and ZEBEC, they very much complement each other as you know, companies and blockchains in this space. They very much complement each other. So also Metallicus there, making it easier for credit unions to use stablecoins. Let's continue.
Stablecoins. Stablecoins, I believe, will be treated and are going to be treated like a regulated financial product. And so through that, we can use the digital identity and in an opt-in manner. So a lot of people have said, oh, I don't like this idea about digital identity. Realize that it's opt-in, right? So you don't have to use it necessarily to use a blockchain. A blockchain by.
So I like that they're possibly making digital identity opt-in, because again, if it gets to the point where it's like you're telling me I can't prove that I'm human unless I have digital identity, I really don't like that. I vehemently just say no to that. Like, no, I'm human. I don't need a digital identity to prove that. Nor do I, as an American, need digital identity to prove that I'm American. People have been doing it for years and years and hundreds of years before a digital identity. So it's not necessary for that. But if you're telling me it's an easier way for me to not in a non-fraudulent manner transport my money, okay, I'm good for it. I'm good that way. But yeah, if it's an opt-in system, it seems like they've done some metrics and polls to understand that some people do have a problem with digital identity, so they are going to make it opt-in. Okay, and that makes sense.
By definition, is free and open source software. Anybody can access it. Anybody can, access the network from anywhere in the world. But through digital identity, platforms can comply to the Bank Secrecy Act and they can comply to regulations. So in the future, what you're going to see are these kind of opt-in platforms that automate a lot of that compliance and make it very simple. And I believe that a lot of the regulatory aspects will start to fall more so on the banks and the money service businesses, and there will be kind of a delineation between smart contract developers, dApps, and those innovators, while they're working together hand in hand with credit unions, banks, financial institutions, and these technology layers like digital identity will not only help comply with the anti-money laundering statutes, but also are going to keep us safe. They're going to keep your grandmother safe, your brother safe. From losing crypto, you've heard these stories where somebody maybe, loses their keys or gets hacked. We're going to eliminate that. Not only has blockchain eliminated counterfeit currency, but now we're going to eliminate the issues around theft of currency. And we're going to really make it fully traceable to the point that we can stop a fraudulent payment real time. And that protects regular consumers and businesses. And so I think it's going to be the internet era for money, like what we saw happen, 30 years ago with the dawn of the internet. Now everything is online. Business moves 1,000 times faster. So money over the next few years will go through this rapid transformation and acceleration where it's moving 1,000 times faster and things are more secure. And if I want to send a bank wire, it's no longer it'll arrive the next day or before cutoff time. It'll arrive instantly, globally, anywhere in the world. And when I type in that information for that bank wire, I'm no longer typing accounting and routing number and SEPA and your name. I'm typing your @ username, your handle, and seeing your verified digital identity pop up. So I think that that's
Okay, so all of that is really, really awesome. Basically, Marshall's getting into, hey, with digital identity, we'll know who you are. We don't need a social security number. We don't need all this other stuff like date of birth, all of this. We got it. Okay. But your digital identity, we'll know. And now you're protected, you're safe because we know who you are. And we have probably on the other side our digital identity. So both parties' digital identity is known. We're good, right? Again, some people who are absolutely privacy people, they might scoff at that. They might push back a little bit against that. Like, what does it matter? Like, why does the government need to know who I am and all this other stuff? And, for those people, there's a lane, right? You could do skills trades and things like that. But for most people, right? You need to be known when you do a transaction. This is not changed. This is how things work. So digital identity could make that a lot easier, right? So kudos to Marshall for explaining that in a very succinct way.
that's really very exciting. And also when it comes to digital identity, we're going to move past this antiquated idea of you have your SSN and your password is your username and everybody's data gets compromised. In the future, you'll have your username like at Corey, at Marshall, at Buddy. And when somebody goes to verify your credit score, goes to verify your information, you're going to cryptographically sign it with your private key that no one has.
And this is the technology that Metallicus actually did innovate, okay? That because I was having this conversation with someone else from Brazil, right? And they're like, we do not give our bank card to someone and they just walk off with it and come back. Like, and you think about that, like they have your name, they have all your banking information on that card, they could easily write it down. And that is a security risk, it is a fraud risk. We never think about it in America because virtually people don't they don't fraud with that because they could lose their job and stuff like that. But it was very odd for that Brazilian person that we just give a person our bank card and they just walk away with it for however long and come back with it. That is a fraud. That is a security risk. That whatever that person does with your card in those seconds, they could write it down. They could have another person write it down. They could take a picture of it. There's so many things there, right? So it's better if there's just your handle, like say, my handle was at Ruel or something like that. So at Ruel is the only information that they would have. They wouldn't have my legal name or, my full legal name. They wouldn't have my banking card information, which they could tie to a whole bunch of different other things. So there is a security risk with that this could clear up.
This is all very intriguing. And I think, Marshall, holistically, what you're saying is that should be able to build up more trust in the way that these transactions are taking place, which at the root of kind of the issue sometimes with the public is the trust feature, as you referenced, when the internet came online and from where it started to where it is today. And this is where Congress, I think, plays a huge role in that. And Congressman Carter, specifically because you guys hold so much of the public trust, right? And it's one of the biggest barriers to adoption for anything, especially as we dive deeper and deeper into digital assets. And I'd love to know from your perspective, what does
Well, there's trust and then there's also consent. I don't want to give someone consent to do something where, okay, well, I'm giving you this trust, but that trust is also implying that I'm giving you consent to do something else. And that's the thing that comes into play with digital identity, where it's like, okay, this does help with fraudulent type of stuff like that and all of this, but am I actually giving you consent to do something else too? That needs to be talked about, and that also needs to be, checked on for sure. We don't want to be giving consent for someone to do something with our digital identity that we don't want them to do with our digital identity. Like, okay, you only have consent to use my digital identity when it comes to things like finance and verifying that the transaction isn't fraudulent. That's the only thing you have my consent to do. Anything else, you don't have my consent to do. So that needs to be said, and also made sure to that you emphasize that. Okay, yeah, let's make sure that fraud doesn't happen, but let's also make sure that you don't use my identity without my consent in any type of bylaws to do anything with my identity in anything other than the consent of finances, period. So I think that's also something that they need to focus on.
Responsible innovation actually look like in practice and not in theory from where you sit?
Well, I'm glad you brought this up, and I'm glad Marshall brought this up, particularly when he alluded to the internet, because, and guys, y'all need to understand, Congress oftentimes is hesitant to move on things like this because we don't want to stifle innovation. There are things that we need to do
Right,
with the internet that we
and they don't want to stifle innovation, but just using as a reference, right? Facebook made it very easy and easy for the first time, like to talk to college friends in other colleges, to meet them online and then possibly meet them in real life. So the ease of doing that was very easy. But then in the bylaws, what we didn't understand was we gave them the consent to use our data any way that they want to use our data. So this is something also that needs to be brought up with digital identity, right? Beyond the fraudulent part, okay, what are we also consenting to here? And how do we make sure that we limit we limit what we're letting you guys consent to? Like, we only want you to use it for financial purposes and verifying who we are, and that's it. That's the only thing you have consent for.
We haven't done, particularly with kids' online safety and things like that, because we're afraid that we're going to stifle innovation. And we've got to be, you need to understand that. My dad always said that when you don't do something, you're doing something. And that's kind of what Congress is like sometimes. We feel like let's we're afraid we're going to mess it up, so we're not going to do anything at all. Well, we're doing something. And I think that's what we need to understand, is that when I say we, Congress needs to understand, is that we do need to offer this to the marketplace, that they want this. They want this kind of regulatory clarity. They want responsible innovation, because that means that consumers will be able to trust this system. And that's going to be very important. But I'm just trying to articulate the sense of Congress here in this, in the way that, sometimes not only are we afraid to do something because we're afraid we're going to stifle innovation, as I said before, but also we have a big tendency here in Congress to let perfect stand in the way of very good. There are some things that we could do to really improve things that would make it very good. But just like I want to use an example, the Clarity Act, we passed that out of the House, but the Senate now is they're nitpicking it, in my opinion, and trying to break it up. And I'm really concerned about what's going to come back to us when it does come back to us. I'm proud of the fact we got the Genius Act passed. I think that was good, signed into law. But now I'm even hearing that they might want to pull that back and tweak some things in that, which I'm not opposed to, but at the same time, it does concern me.
There's a lot that you guys have to be on top of, Congressman Carter.
So that's very interesting here. And of course, we as people, right? We want everything to be perfect, and I have to like check myself with that even too, right? When you want to come onto the YouTube and give the perfect video, instead of okay, well, if I go on and give a very good video, you know, I'll stop myself from creating because I'm trying too much for perfect when very good would very much suffice. And you know, this is something we definitely do as human beings. Congressman is right there, but we shall see how this goes as far as the crypto market infrastructure or Clarity Act is concerned.
Like I said, the public trust is at the forefront, and the protection that needs to go into place, which at the end of the day, you guys hold the keys to that when it comes to the regulation and digital assets. They are increasingly intersecting with every part of our lives, with the supply chains, identity, national security, all of those sort of things. So how should people listening in right now, everyday consumers, be thinking about blockchain infrastructure in terms of resilience and not necessarily speculation? Oh, go ahead, Congressman.
Well, Marshall, you may have an opinion on this, but I really do. I really think that the general public's looking to us to do this. And another thing that I want to mention, and again, I keep bringing.
And that's interesting. You said, Marshall, you might have an opinion on this, almost as if he's deferring to Marshall in this situation, which, of course, he probably should be because Marshall is an innovator and a leader in the digital asset space. He definitely, if he's a congressman that has a committee or is on a committee with Marshall, you would defer to his expertise because he is an expert in the space. But it's interesting to see that because it shows you that Marshall is clearly a big name in Congress, in government, when it comes to digital assets and innovation for the U.S. there. So to have the senator, in a sense, deferring, and I'm not trying to, you know, downplay the senator or make it sound like he's not doing his job or anything like that, but it just shows you the power or the confidence that Marshall Hayner has developed with these U.S. congressmen, so much so that this is, that I know to date, the second one. Like I said, he had Byron Donalds on from Florida, now Buddy Carter from Georgia. So clearly Metallicus has done their due diligence, has gotten in the right spaces, so much so that the congressman feels comfortable to say, okay, well, I want to see, or I wonder your opinion on this, Marshall. Like that's fantastic to know that that's the company that I'm invested in, you know, when it comes to Metallicus.
My experiences with the internet, because I serve on the Energy and Commerce Committee and Communication and Technology Subcommittee, and the internet's under our jurisdiction. And if we don't do it at a federal level, if we don't address some of these things at a federal level, they're going to be addressed at the state level. And then all of a sudden, you're going to have a collage of different rules and regulations, and we can ill afford to let that happen. Not only that.
Now, on this part, I might I might actually disagree with them. They don't want to have it at the state level because then you'll have like I understand why they don't want to have it at the state level, and they want to have a blanket federal law, because the blanket federal law will mean that this is done in a standard way for all 50 states or all US 50 all US states, including Canada, Venezuela, and Greenland, if we get that far, right? But you know, if a state wanted to have different laws, I almost feel like it should be able to, but then again, that will make it harder for things to innovate. Um, you know, it would make it harder for things to innovate. So in that case, I guess even though I kind of fundamentally disagree for innovation, for things to move forward, it does need to be a federal law. So I guess I do agree with them. I agree with them logically, even though my heart disagrees. Put it that way.
But if Europe implements, rules and regulations, that's going to set the tone, if you will, for what we are trying to do over here in America as well. That's why we need to be the leader. We need to be the leader at the federal level. We need to get some of this legislation done. We need to offer more clarity, regulatory clarity. We need to have responsible innovation. There's no question about that, so that the rules that consumers can trust, they can understand. We need to address fraud. We need to address all of these issues. There's a lot to unpeel here in this onion.
Yes, there definitely is. And Marshall, I want to bring you back in to this conversation because we often talk about public-private collaboration, which we know is much easier said than done. But as it relates to this topic specifically, what does effective collaboration between lawmakers and innovators actually look like when it's working effectively?
Yeah, I just want to take a moment as well to thank Congressman Carter and everyone in the Congress, the Senate, the executive, President Trump's administration for putting the focus on getting this right. Because I just want to take a second to recognize that, because it is so important. It is the future of our country. Our businesses run on the financial system. The backbone of America, small business, runs on this financial system, and if we can accelerate it, we can bring our country forward, on the world stage. And we are already the global leader with the United States dollar, but it's time to do the big technology upgrade and, embracing it and running forward, which I guess will segue me into to the answer to your question, will happen with that merging the interests of those two in terms of the private sector has had to self-regulate for years, in a sense. We've had to kind of set standards internally and adapt to those standards. And over time, we've, as the United States government has begun to, be very proactive and embrace crypto, we have come to Congress, we have come to the Senate, and we give these speeches and we act as kind of a sounding board. How can we do that? And realistically, the best way to do it is for the leaders in the crypto space, people like myself, but other leaders. You have like Brian Armstrong with Coinbase and Jesse Powell with Kraken. They stand up and they say what's important for innovation and what's important for consumer protection. And it's important that we acknowledge those things. And to Congressman Carter's point, it doesn't have to be perfect. We want to get it right, but if we spend so much time splitting every hair, we won't get anything done, right? And I think that that's what the congressman is alluding to here, is that we need to get the clear federal definitions. And I really like what he said there, because that was my impetus 5 years ago, 6 years ago now, with the Cryptocurrency Act 2020. It was 3 pages long, and it kind of got shot down during the middle of COVID. But I do believe in having the federal definitions very clear, the assigned prudential and primary regulators very clear, and those policies very clear. And there will be plenty of time to refine things over time. And that can happen through this feedback loop of the private sector. And the private sector needs to tell the government, hey, here's how we're protecting grandma. Here's how we're protecting you, how we're protecting access to your bank account, to your crypto wallets. Here are the best practices. And this is the right way to do things, right? There's a right way and a wrong way. And I think that by being very concise right now at the federal level, we set a precedent for the states. The states can adapt. If we have 50 different laws on the books for every state boundary that you cross, it is going to kill the industry, 100%.
And see, that was the point there that I had to change my stance. If there are 50 different laws, that's not going to work. That's not going to work. It really isn't going to work.
So we need to set these at the federal level, and they need to be the basic common sense stuff. And a lot of that comes from the innovators like myself and innovators in the crypto space that will say, hey, digital ID, opt-in only, it's a great way to prevent fraud across blockchains. Ability to communicate real time. So when one crypto exchange is hacked or has some sort of issue, everybody knows and all the wallets are frozen automatically. Imagine if we had that in the banking system. When something fraudulent happens and one fraudster tries to move from one bank to the other, imagine if all of the accounts that he's ever sent to or interacted with would be, flagged immediately. You could save a lot of people's time and money and headache. And when you look at like the work like the CFPB does or other regulators, we could make it easier for them, right? We could make it so much easier. And at the same time, by doing that, we open up the opportunities for everyone, not just young people, but at every age range. We're opening up DeFi. And one thing that I said a while back was I believe that when it comes to young people, especially that are starting to build their nest egg, starting to save, regulated DeFi is going to be the big opportunity zone. The areas of crypto that were unregulated, that threw caution to the wind, those were problematic, and that was kind of a previous era.
Yeah, DeFi is going to be a big opportunity zone, guys, as far as like yield and what they're offering you yield. Like I can remember back in the day, this might have been the early 90s, where bank accounts actually offered 4 to 5% yield on savings accounts. Well, they don't do that anymore. In comes DeFi, and they do regularly do 4 to 5%. This is where you're going to get your whole perpetual money engine going. In some cases, shout out to the Patreon, right? In some cases, you can actually find yield where it's 20%. And these are actual like staking mechanisms that, and good projects, right? And that's even more of a perpetual engine, right? And you keep growing and growing your money by passively letting it stake, grow dividends and things like that, right? So this could be a very big opportunity for those young people right now.
But this new era is going to be focused on digital identity, anti-money laundering protections, very strong cybersecurity programs to prevent hacks and exploits, and also the ability to retroactively unwind things. So this idea that, everything has to be completely final in every sense of the term, maybe it doesn't. We can use DAOs or decentralized autonomous organizations to be that balance between centralization and decentralization. We don't want anything too highly centralized, but at the same time, we want systems that are adaptive and flexible. And I believe that there's going to be that merge between the traditional finance world of banking, credit unions, and blockchain and fintech. And I think that a lot of these things are going to cross-pollinate, where we have very strong anti-money laundering controls. They're going to start to come more on chain. And where we have frictionless finance and free and openless and permissionless systems, that's going to start to come into banking. So I'm very excited for that. And I think that that is really the key here, is for the innovators in our space to get loud and to speak up about the things that we need clear regulation and definitions on, so we don't have to spend so much money with our lawyers fighting over every little thing. And at the same time,
So you see DeFi coming into like traditional banking.
when you look at how the banking lobby is pushing back on this stablecoin rewards thing, this is, instead of having I see some innovators doing this headbutting over this issue. Oh, well, we're not going to support you. Well, maybe let's talk about all the different ways that this can be done. And let's talk about the ways that this benefits banking. And then I think the lobby will change. So it's really about the feedback. And also as well, for the traditional finance world, when they start to get in and use these applications themselves, it starts to click. And they start to understand, oh, this is how it benefits my credit union. This is how it benefits my bank. We, in the past, would see money coming out of the credit unions and coming out of the banks. And they're concerned about that because that hurts their bottom line in terms of their business of lending. You have to have capital to lend. So why not have stable coins be built at the business and credit union level? So instead of the money coming out of the bank and going somewhere else, potentially overseas even, have it stay inside the credit union, have it stay inside the bank. Now,
This is exactly what Metallicus will do for credit unions, right? And have the money stay inside of the credit union and use Metallicus's system as DeFi that they can offer to customers, and customers can access it in a manner similar to what they do now. They won't even know necessarily the blockchain is behind it. They'll just know it's the best deal.
now it's growing the assets under management while growing the consumer protections and the trust and safety. In the future, if you have $1 million of cryptocurrency, you made it. You've saved up, you've compounded your interest. Now you have $1 million. you want to keep it inside the bank. You don't want to keep it under your mattress. You don't want to keep it on even a multi-sig setup between hardware wallets. Ultimately, the bank is going to be the best place to keep it. Now, of course, you want good hardware, good tech as well, but this is where we're going. We're going into a world where crypto is money and will be regulated as such.
Marshall, I love how optimistic you
Crypto is money. Gotta love that.
are about the future and where things are going, which brings me to my final question for both you and Congressman Carter here. Staying on the optimistic outlook, when we continue to look the next 11 months down the road for 2026, what is the single most important decision, or perhaps non-decision, the U.S. has to get right if it wants to remain globally competitive in the digital asset and financial innovation space? Congressman, I'll go ahead and let you take that first.
Well, the first thing I want to say, I want to really emphasize what Marshall said about the public-private relationship, because we are looking for the public sector to help us with this. Don't count on Congress to come up with all the answers, please. We do need best practices. We do need to understand exactly what's going on in that area, because it's extremely important. You know, if you're a college football fan, they come to us and they want us to straighten out name, image, and likeness, and we're kind of throwing our hands up. And what do you want us to do? But we can ill afford to let the same thing happen in this sector that has happened with NIL, and that is they got the Wild Wild West now. That's not what needs to happen. That's why you got to have some kind of federal regulation, some kind of federal outline, if you will, to guard against that. And I appreciate the fact that you're willing to work with the banks and the credit unions. I'll be quite honest with you. I have a lot of the banks, a lot of the credit unions come into our office. They're scared. This is an area where they're uncertain of what's going to happen here, and are they going to be put out of business? But I think working together, we can make sure that doesn't happen, and that they can benefit everyone. So I guess what I'm trying.
So he's already had conversations with banks and credit unions, which is why, he's probably had conversations with Marshall too, right? So very, very interesting there.
To say is that, it's like a Billy Joel song. Get it right the first time, because that's the main thing. Get it right the next time, that's not the same thing. But we do need to do something, but we can't just do something to be doing something. We need to do the right things. And I believe we can do that if we have the buy-in from the private sector and the help from the private sector. Congress does want to get this right. We do want this to work. We understand how important it is on a global scale.
I'm glad that Congress definitely understands how important this is, because it's going to impact and touch everyone's life in one way or another. And Marshall, I'll definitely let you have the last word here in terms of looking ahead to 2026 and, what you feel we need to get right throughout the rest of this year.
Yeah, so it goes back to that bill I worked on in 2020, the Cryptocurrency Act. We need the very clear definition of the different types of digital assets. I believe there are three. You've got currency, stable coins. You've got commodity, that's like Bitcoin or XPR or Ethereum or Doge. You've got securities, that could be like a
He called XPR and Doge commodities like Bitcoin. Very interesting. But yet he says those are different from stable coins, and those are different from currencies.
Tokenized stock, right? The different types of digital assets, I believe there are three. You've got currency, stable coins. You've got commodity, that's like Bitcoin or XPR or Ethereum or Doge. You've got securities, that could be like a tokenized stock, right? Like a Tesla stock on the blockchain or something like that. And we need to have very clear rules of the road of those assigned regulators and how those work. And then when it comes to money transmission, we need to translate the BSA for how that works for the blockchain in a way that's innovator friendly, that welcomes innovators, but we're not allowing anything to happen in terms of it's a free for all, but we're going to innovate responsibly. We're going to do things the right way. So I think that on top of those things I mentioned in terms of the the different types of clarifications and assets and the regulators, I think also that it's important what Congressman Carter said, that we get it right. It doesn't have to be perfect, but we have to get it right, and we have to make small building blocks. So we start the foundation on the Market Infrastructure Bill, the Clarity Act, and the Genius Act. And we need to assure the banks and assure the credit unions that this is also about you guys. This is about protecting and growing our financial system and not the opposite. And we're going to do it through responsible innovation. We're going to do this the right way. We don't want the capital.
So this is a partnership. This is not them trying to go against the banks. They want to actually help the banks succeed, okay? So we really got to understand that. And companies like Metallicus really make this clear because they're all about onboarding credit unions.
To fly out of the banks and to have a banking crisis, we want capital to fly into the banks and to grow the stable coins by the banks. My big prediction, and what I've been saying for years, is that there won't be just one stable coin, that I believe that every credit union and bank will have their own stable coins, and those will interact in baskets of smart contracts with digital identity. And eventually, when it comes to other international currencies like euro, for example, or Japanese yen, the efficiency of the foreign exchange rate is going to become better than you've ever seen it before, right? And I think that that is really going to, again, place the United States at the center of innovation for blockchain technology. We already are. It's really just ours to lose at this point if we don't get it right. And my final thought on this is the way that we don't get it right is that we fight over it, that everybody fights over it, that, Republicans and Democrats and everybody fights over it. And privacy advocates fight with digital identity advocates. No, we're all Americans, and we're moving towards this idea of accelerating finance and giving opportunity for everyone. So the way that we make it is we come together on the things that we do want, and we assure our financial institutions, we want to see you guys grow, and here are the tools how to do it.
Yep. 100%.
All right, there we have it. I can't thank you guys both enough for sharing all of these great insights about. And I think this is just a very timely conversation, especially as we're still at the start of the year. So once again, thank you, Congressman Carter, and of course, Marshall Hayner from Metallicus for putting this on. And you guys see them right at the top of your screen, so you know where you can follow them right here on X. And thank you all so much for joining us.
All right.
Thank you again, Corey, and thank you, Congressman. Thank you, everyone here.
Thank y'all. Appreciate it.
So here we go, this was from the 12th of January, so not too long ago. Marshall Hayner's done a good job here of, again, putting himself in league with the lawmakers, where it seems like he's met with now and had spaces with two different congressmen. So this is very clear that Metallicus has congressional approval of some sense, right? At least from these two guys. They're putting themselves in these rooms, the right rooms, right, to help push innovation forward. So if you made it to the end, let's put Marshall in the comments for Marshall Hayner there. And let me know what you guys think about this. Does the U.S. need to be leaders in the stablecoin space? Can you guys see the connections between Metallicus and ZEBEC, and that Metallicus making things easier for credit unions and onboarding credit unions with stablecoins is just going to make it easier for ZEBEC, because more stablecoins on the ISO network, the more they can communicate with. Let me know. I want to hear from you in the comments. And thank you guys so much for 9,000 subscribers. We're very, very close to 9,100 now. We're somewhat at I think it's 9,072 or something like that. Let's make the push to 10K here. So very, very thankful for that. Please like and subscribe, share the channel, because I know you can't all use Super Chat, but you can help in that way, and it is very much appreciated. So tried to make it pretty close to an hour, so we did that. And I'm out, guys. Have a good one. Peace.